Abby, you darkened the door of Martin Van Buren High School a few years ago in Queens, New York. Let's bring our high-powered, highfalutin conversation down to the people of Martin Van Buren High School. What does Janet Yellen's statement yesterday mean for the average American?
It's a great question, Tom, and she answered it directly. Because she was asked about what is going on in the economy, and she said we're really focused in on the labor markets. And one of the things that we all have to keep in mind is this discrepancy between the reported rate of unemployment, that so-called U3, and the U6. And when you look at the broader measures of unemployment, you see there are still many people working part-time who'd like to add some more hours. And also the participation rate is not where we think it should be, meaning a lot of people have just dropped out of the labor markets. Yeah. And so this is a Fed that is really focused in on making sure that the average American is feeling better than they are right now.
You've got an interesting structure at Goldman Sachs about changing equity calls with deference in many ways to David Kostin. Did Goldman Sachs adjust your equity perspective yesterday after the announcement and then the press conference?
The answer, Tom, is really we've not made adjustments either to our global view on the economies or the markets. And the reason is that our chief economist, Jan Hatzius, I think has nailed this quite well.
He did. Yeah, let me interrupt. Folks, Ray Dalio, Carl Riccadonna, and I said this yesterday, Jan Hatzius of Goldman Sachs nailed this call, didn't they, Abby?
They did in two ways, Tom. One was, what was the Fed going to do? And Jan has been of the point of view for quite a long time that it wasn't going to be September, December 2015, or maybe sometime in 2016 was more likely. But what I think is more important than a specific call is the view that we've had on the global economy. Basically, the United States, which we'd all like to be more robust, is nevertheless one of the strongest economies in the world. We're the largest economy in the world, so clearly what's happening here matters a great deal. But when we take a look at the other large economies, China, for example, the world's second largest, there's a clear deceleration going on. Mm-hmm. We also know that Europe is a mixed bag. Germany performing far better than some of the others. And it looks like U.S. economic growth is 1 to 1.5% higher than it is in the other countries in Europe. So when we take a look at what is the central bank likely to do, the idea is that they're probably better off waiting longer. Wow. And perhaps the risk of waiting too long, in their view, is less of a concern than moving too quickly.